Welcome back, everybody. Deliberated trading today. I just wanted to go through some technical indicators that are incredibly useful that are built into the Thinkorswim platform. Really simple to go through. It actually comes from the technical analysis of the stock markets book by John Murphy. So I just have a bunch of them, and then I have some of my own that I've created. I just wanted to kind of go through them with you to just see how I look at some positions and how I look for opportunities. So let's go into it. Just gonna pull up some of my positions here. I've got Murphy Technical. I just got into Walmart actually. So if you go in here and switch over to Walmart, so here we've got the 5 and the 20. Helps me see what exactly I'm going to be going. What shorter term time frame? A lot of short-term traders like to use the 520 crossover um, as an opportunity to buy. Typically, it's in a trend. In this chop right here, you wouldn't necessarily use that, but like pull up, pull back, get in when it crosses, maybe get in when it touches or it's about to cross. That's the way you could use that. Moving on, we've got the 10 period and the 50 period, another stable that a lot of traders use as well. So just looking at that, you could use it as a crossover. A lot of people use the 10 as a pullback spot, or even potentially the 50 if the 10 is broken. Moving on here, I've got a moving average envelope 5, 10, 20. It's again very, very short term. Just looking back closely at Walmart, I wasn't watching it here. I was actually watching this flag that showed up here. You've kind of got the crossover in between in the middle, but not a red color. Not everything's negative. Green's positive, obviously. So we had the green, a little bit over there, and then boom, started to shoot up. But yeah, that's another one I use. These are moving average envelopes. They can be helpful to see when the stock is potentially overextended. So it's just 21 period moving average and then a envelope of 3% from that average. You can use that to see where it's gone over. A lot of traders like to use it as stops. So let's say I got in here, I could use that as a stop. I personally like this recent lows, but they could use that as a 3% away from the moving average as a stop. And then you can also use it as, hey, are we super far away? Are we going to come back in? Maybe I wait for it to come back in and see what the move is. This is a weekly moving average envelope, 10 period moving average, 10-week moving average with 5%. And as you can tell, it stays inside of there. Pretty good. Every once in a while it gets out, then it comes back in. Those are big moves like that earning move, earnings again. That one wasn't earnings, but that was when we recovered back in April. But yeah, just another way to use that. Once again, you could use it as a stop as well. Let's see, we've gone quite a bit outside of that. This is a 40-week moving average with a 10% envelope. So just a little bit longer term, a little bit wider. As you can see, if it with this one, if it gets outside of it, you might be in for a run in either direction. So look at that. It's a great one. And Bollinger Bands, just to measure volatility. I personally don't use them very often to look at and to see how to trade. I do use them with like the squeezes. Like you could see, we exploded here and then we started to squeeze. So that was a resting spot for Walmart here. We came back in and then obviously there's a breakout happening here and it's opening up because our average true range is increasing. Another one that's pretty useful is a 13-week moving average. Once again, you can Pick whatever average you want, but these are the ones from John Murphy's book of technical analysis. So I just threw them all in here, and I like to go through it every once in a while, or like look at positions that I'm in and see where we're at. But I just got into this one, so but I was using it to just see where we were at. Then this is a 10-week. So I've got a 13-week and then a 10-week, just slightly different. But this is a 10-week and then a 40-week moving average. People like to use as for their crossover and to see where the trend is. Kind of like the 200 and the 50 on the daily. Then I also use price channels. Um, it does help you visualize the higher highs, higher lows. So this is a 20-week, just a month. As you can see, we've been going up. May have been a little scare there, but overall, still in an uptrend. But as you can see, we're going to be making a new higher low, and then we'll be making a higher high as well, the 20. And then I use a monthly 4-week, which is in the book. They don't use a weekly, but they use a monthly, which is interesting because if you think about being a long-term investor, you're probably going to be looking at weeks to months, not necessarily the year. I mean, you can look on the year, but you'll want to look at a longer time frame, typically. Then he's got some oscillators in here as well. So with his momentum that he throws in here, he says he's a 20 and an 80 period moving average. So I have those on here. I also have momentum, as you can see. I've got a 10 and a 40. He specifically uses them to show divergences in his book, or he doesn't really talk about the crossover here, or if it turns up. He uses some divergence, but he also would use it as like, let's look at this level right here. Going back in time, it was a specific level bounced off there. You can kind of see like the normal range that it's in. So if you see it overextended, might expect a pullback into there as well. And you can do it on this one as well. So like here, you can see we kind of got a little high-sided on our momentum. Um, moving average divergence, so it's just distance between a 9 and an 18 and then a 10 and a 50. It's different than the moving average crossover divergence because that's literally just taking the distances between the two. Useful to see whether or not are we continuing, is one moving average growing from the other, or is the one not? CCI, I don't really use this one, but typically a move up above 100 and away from it is bullish, even if it comes back in. And if you get the cross down below, that's bearish. RSI and just a slow stochastic. Once again, just use them for how they are in an uptrend. You don't want to use the overbought signal typically to be like, oh, let's go short. It does not always work. Typically, what you want to look for is divergences in new highs, new lows. Like this is a high here. That was a high there, but on the RSI, it's higher. But then we obviously destroyed that. But look for our divergences, and then in an uptrend, typically the oversold signal will typically be a good entry for maybe a longer term buy. It's the same thing with the stochastic. If you come down below, uptrend, come back up, you could use that. Come back up, and then you can also look for the divergences. That's how to use that. This is a weekly RSI stochastic combination. So I like just longer term time frame. Just standard settings, nothing special. Williams percent %R, basically an upside down stochastic. Useful sometimes. Here's your MACD. Just to look at, see where the momentum is. That's all I use it for. I'm not using it for signals or anything. I use price action for signals. Weekly MACD. This one is just these. They are candlestick patterns that he covers in his book: dark cloud cover, piercing line, evening star, morning star, rising through methods, falling through methods. So I just have them on there. They give signals every once in a while, but Um, Not very often, just common. This is uh, actually a DMI parabolic SAR um, combination that he talks about in his book. And then I've overlaid when the ADX line is over 20, and then depending on which direction we're moving on the directional movement index, I've colored the background green or red. So I have one for a weekly, daily, a weekly, and a monthly. Just helps you see what's the trend. Are we strong? Are we not strong? Whole moving averages. It's just a cloud that I built in ThinkScript. 20 period, 50 period moving average, whole moving average. So it calculates it differently. Weekly, same 1040. As you can tell, in a pretty good uptrend. This is a thing that I learned from Schwab, actually. They have a Schwab coaching. I just threw this on here, but these are the turtle trader indicators and like Jesse Livermore and what he's looking for. One of the coaches there built these, and then I just threw them on chart because I was like, it'd be good to know and just look at, are we making higher highs or are we making lower lows? So helps with the breakouts. This is my own thing. This is VWAP, anchored VWAP. So yearly, year to date, and then I'll have a weekly on there. I don't think I've changed this to the new week. Yeah, I haven't changed it yet. So let me move this here. I think it's the third one. Yeah, so useful. Just kind of see where price has been trading at based off of the volume. As you can tell, we kind of got pretty flat here, which is a good sign, actually, on a breakout. And it's not pulling it down. Let's see, volume profile, useful. Just kind of see where people have been buying historically. As you can see, Walmart, lots of volume in here. Lots of volume. So we've broken out into new places here. So, Walmart's never been up here. So, most people would be like, oh, don't buy at new all-time highs. Be like, well, I'm just swing trading. Got 2 shares, small account. But useful to find volume nodes. Like if we were to come back into here, I'd look for people buying in that section. Monthly, if we were to break through this, I would suspect that we come down into here. That's how I use these monthly. Monthly peer big zone right around 95 to 100, or we could go all the way down there. Who knows? Then I've got some things, once again, from Schwab Coaching. They've got some, it's just like a basic label to understand like year-to-date change, month-to-date change, week-to-date, PE ratio, dividend yield, payout ratio, new 52-week high. What are we off the low? Where are we in the 52-week range? When was the last earnings? Did we beat it? How many stocks are above the 200 period moving average in the S&P 500? So there's that. And then they also they built a Ben Graham value just for investing. So they're saying that the value is based off of what is right now is actually 133. So, and then I've got a trend thing that I've built. It's based off of quite a different things. Just helps me see where we're at. And then I use relative strength. That's the daily, and then I have it on the weekly chart without labels, and that's that. Pretty cool, pretty simple. Um, if you're a technical analysis individual and you look for those and you're looking at moving averages and you're using that rather than you're looking at the micro economics of technical analysis, not the macro, it's a great way to start. Just give it a good visual. And then you can just move forward. That's what I've got for you. Hope it helps some of you to get some ideas how you can look at stocks in a new light. And I hope you have a great rest of your week.